Hello, everyone. Welcome to Kudlow. I'm Larry Kudlow. So, after speaking yesterday to a group of Washington business economists, Fed Chair Jay Powell had a very revealing back and forth with a bunch of reporters. I want to explore it. Inflation's the #1 problem in the country. A recent Wall Street Journal poll asked respondents what's the most important issue. Inflation was at the head of the list. Twice as many people cited it as the second highest issue, which was the war in Ukraine. 10 times as many people cited inflation over the coronavirus pandemic. In that same Wall Street Journal poll, 63% disapproved of Joe Biden's handling of inflation. Just 34% approved. Now, a little later in the show, we're going to talk to Senator Rand Paul about the causes of inflation and what to do about it. But I think we're headed for some very rough going over this inflation problem. Interestingly, importantly, Jay Powell said yesterday, and I'm going to quote this, quote, "I believe these policy actions and those to come will help bring inflation down near 2% over the next 3 years." Now, hat tip to my friend Byron York for picking this up. 3 years, folks. Now, I'm going to say, in all likelihood, it's going to be 3 years of stagflation. And unfortunately, the probability of recession during this period is quite high. The idea of a soft landing is really a triumph of hope over experience. The Fed hasn't even begun to fight. Talk, yes. Action, no. Not yet. Right now, in the first quarter of this year, I'd say real GDP will rise by maybe 2%, and the official inflation in the GDP accounts will be maybe 6 or 7%. So when prices are rising faster than output, that's called stagflation. That's where we are. Wages are rising nicely, but unfortunately, inflation is rising faster. So working folks are losing ground. The inflation we're experiencing was grounded in excessive government spending, deficit finance, and accommodated by Fed money printing. Jay Powell continued to ignore all of the warning signs over the past year. And this whole argument from Joe Biden that Vladimir Putin has caused inflation is utter nonsense. The oil price impact and the gasoline price effect, that jumped the last 5 or 6 weeks, okay. But Biden has amnesia about the prior year when consumer inflation jumped from less than 2% to over 7%. Gasoline prices and the prices of virtually everything else have increased significantly. Food, housing, cars, recreation, commodities, services, you name it, it's all gone up. In fact, you could take energy right out of the CPI, and the inflation rate would still be 6.5% over the past year, and that would still be a 4-decade high. So while Mr. Biden has waged war against the fossil fuel industry and lower production has caused energy prices to skyrocket, that's really only part of the story. As I said, deficit finance and easy money is the bulk of it. Noteworthy, Jay Powell said he wanted to be like Paul Volcker in his presser yesterday. Well, sorry, Jay. You're more like Arthur Burns in the 70s, who pumped up the money supply and destroyed the dollar. Way back when I was an assistant to Paul Volcker when he was president of the New York Fed in the early 70s. Just saying. Anyway, when Volcker took over as Fed chair, he started shrinking the Fed's portfolio, shrinking the balance sheet, hauling in the money supply, bringing down surging commodities, and rescuing the value of the dollar. Real interest rates literally skyrocketed. If Jay Powell wants to be like Paul Volcker, he should read up on what Volcker did in the early 1980s while Ronald Reagan was president. Basically, Volcker believed in a strong king dollar and a commodity price rule. He kept slowing down money supply until the dollar fully recovered and commodities flattened out. Jay Powell has ignored the money supply. He's ignored the Fed's balance sheet that creates money. Jay Powell never talks about commodity indexes. Powell says the Fed may be more aggressive, but they really haven't even stopped buying bonds. They're still buying mortgage-backed bonds, even while home prices are rising 20%. That is an outrage. And even if the Fed gets to 2% in its target rate by the end of this year, that would still be 4 or 5 percentage points below the inflation rate. They need to get their target rate 4 or 5 percentage points above the inflation rate. You got some smart Fed people like Jim Bullard of the St. Louis Bank and Chris Waller on the board. They want a little shock and awe to reverse inflation expectations, maybe 50 or 100 basis point rate hikes. That would signal regime change. But right now, Jay Powell's talking the talk, but he's not walking the walk. Inflation fears are jumping up everywhere, including the bond market. The 10-year is now marching towards 2.5%. It's going to go much higher. The 5-year Treasury inflation break-evens, that's jumped to 3.6%, and it will go higher. Commodity prices keep surging higher. In his back and forth with reporters yesterday, Jay Powell acknowledged the numerous mistakes the central bank has made over the past year. But he has not yet laid out a clear plan to reverse those mistakes. And the longer he waits, the worse it's going to be for the American economy and its blue-collar working folks. Where's Reagan and Volcker when we need them?